Hello, I'm Gretchen Fisher from Sun Federal Credit Union. Today we're going to talk about some credit score and report basics. Let's get started by talking about what your credit report can affect. The most obvious thing your credit score can affect is your ability to get approved for credit, but that's not all. It can affect what the rate is on the credit that you are approved for based on the calculated risk of offering you credit, as well as how much credit they approve you for. Current creditors may look at your credit score to determine if your rate should be raised or lowered. Potential landlords may look at your credit to determine your ability to pay the rent. Potential employers may use your credit report to make hiring decisions. Your current employer might also review your credit report before giving you a raise or promotion. Bankruptcy, account delinquency, and high debt levels could keep you from getting a job or getting a raise or promotion. Insurance companies check your credit report to decide whether they should insure you and at what rate they should give you insurance. If you have a negative information on your credit report, like late payments and collection accounts, you could have a higher insurance rate than the consumer without negative information. Is there just one credit score for each person? Many people are surprised to find out they don't have just one credit score. Credit scores can vary for several reasons, including the company providing the score, the data on which the score is based, and the method of calculating the score. There are three major credit bureaus, Equifax, Experian, and TransUnion, but credit scores may not be the same for all of them. Your score may vary because not all lenders and creditors report information to all three major credit bureaus. While many do, others may report to two, one, or none at all. In addition, the credit scoring models among the three major credit bureaus are different, as well as those used by other companies that provide credit scores, such as FICO and VantaScore. The types of credit scores used by lenders and creditors may also vary based on their industry. For example, if you're buying a car, an auto lender might use credit score that places more emphasis on your payment history when it comes to auto loans. In addition, lenders may also use a blended score system from all three major credit bureaus. Let's look at what factors can affect your credit score. In general, the main factors considered in credit scoring calculations are as follows: your payment history, the number of accounts that you have, the types of credit used, the ratio of your used credit versus your available credit, and the length of your credit history. As we talked about earlier, the impact of each of these factors on your credit score varies depending on how the score is calculated. While different credit models calculate score differently, payment history is a significant factor for all of them. How you have repaid credit in the past helps a creditor determine how likely you are to pay back the credit and if you will pay it back in a timely manner. Payment history will also show a creditor details on late or missed payments, bankruptcies, and collections information. Credit scoring models generally look at how late your payments were, how much was owed, and how recently and how often you missed a payment. Your credit history will also detail how many credit accounts have been delinquent in relation to all of your credit accounts. Many retailers offer their own credit and try to entice you with special offers. It can be tempting, but having too much credit could also negatively impact your credit score and become hard to manage. Credit score calculations may also consider the different types of credit accounts that you have. Is your debt secured by a house, car, or other item? Is it unsecured, such as a personal loan, credit card, or student loan? Is it long or short term? And what portion of it is credit card debt? They may look at how many of each type of account you have. Some lenders and creditors like to see that you're able to manage multiple accounts of different types. Therefore, some credit scoring models may reflect this. Another factor lenders and creditors look at is how much of your available credit or the credit limit are you using. Lenders and creditors like to see that you are responsibly able to use your credit and pay it off regularly. If you have several credit accounts that are maxed out or at their limit, that may impact your credit score. Your credit history details how long different credit accounts have been active. Credit score calculations may consider both how long your oldest and most recent accounts have been open. Credit score calculations may also consider how many new credit accounts you have opened recently. New accounts may impact the length of your credit history. Let's review a few tips to help your credit report. Many unpaid bills that people do not think of can show up on your credit report and negatively impact it, such as utilities, rent, phone bills, medical bills, and parking and traffic tickets, taxes, or even the cost of unreturned cable or phone equipment. Every time you apply for credit, a hard credit inquiry is made on your credit account. Every hard inquiry affects your credit score, even when you don't get approved. Even if you've paid off a credit card, hold on to it. Canceling a card can hurt your credit score in two ways. It reduces the total credit amount, which can raise your credit utilization ratio. It also can shorten the age of your credit history. Carrying only one card around may be convenient, but transferring your balances to a single card may not be beneficial to your credit. Creating one high balance that approaches your credit limit sends your credit utilization way up, which will hurt your score. Try to keep your credit utilization ratio to around 30% of your available credit. Beware of helping out family and friends by being a cosigner. Whenever you cosign with your good credit to help out family or friends with less than perfect credit, you take on responsibility for their debt. If they can't pay, you'll have to, or your good credit will suffer the consequences. As we discussed today, there are many factors that can affect your credit report and credit score. Do not get discouraged if your credit is not great. Take what you learned today to positively impact your credit. Thank you for joining us today from Sun Federal as we learned a little bit more about your credit report, credit score, and how you can positively influence them.